Hi once again, everybody. My name is Lori Page, and I lead the advisory team here at Sound Wealth Management. And we've found through the years that many of our clients have charitable intentions. While noble at heart, your charitable contributions can also provide some potentially significant financial rewards to you and or your heirs, as well as fulfilling your philanthropic goals. While many people think of immediate donations of cash and supplies to charities as their contribution method, this only illustrates one method to help support your favorite causes. So in today's video, we'll highlight some alternative techniques for planned giving besides cold hard cash, encompassing the relatively simple to the ultra sophisticated. First, let's look at securities. Gifting securities such as stocks, bonds, mutual funds is often an attractive alternative to cash for current donations, especially if you have highly appreciated positions, as it can allow for some tax savings on top of your charitable tax deduction. For example, through your charitable gift of a highly appreciated security, you can avoid paying the capital gains tax that would be due if you had liquidated the position. Additionally, the charity does not incur taxes when it sells the position as a tax-exempt organization. To achieve this tax-free transaction, it's important to remember that the position must be transferred directly to the charity rather than liquidated first. Next, let's talk about life insurance. Life insurance can provide a means to multiply your dollar to provide a larger gift to your favorite charity at the time of your passing than would be possible for you otherwise. To accomplish this, simply name your chosen charitable organization as the full or partial beneficiary of your life insurance proceeds. You may also note that policy proceeds that are received by the charity are not included in your estate for estate tax purposes. You can also transfer the ownership of the policy to the charity during your lifetime. The benefit here is that you'll receive an income tax deduction for both the donation and for any premiums that you pay on the policy. Stepping up a little bit in sophistication here, let's talk about real estate. Now, for many of us, real estate makes up a very large and important part of our wealth. For this reason, it is sometimes an attractive asset to utilize for your charitable giving. There are, however, some important considerations to take into account when you're thinking of making a gift of real estate. As real estate brings with it some unique challenges, it's important to first consult with the charity regarding their capacity to accept your generous gift. Secondly, while the concept of gifting your home may appeal to you, you also may want to continue to live in it. No worries. You can still fulfill your gifting goals by entering into a life estate agreement with your chosen charitable organization. Such an agreement will allow you to continue to live in your home for as long as you choose, while the remaining interest is transferred to the charity. You remain responsible for the upkeep, maintenance, taxes. However, what's more, you will be entitled to a charitable income tax deduction equal to the remainder interest that was transferred to the charity. Retirement assets. Making charitable gifts from retirement assets can provide several opportunities for significant tax savings. First, during your lifetime, withdrawals payable to yourself from most retirement accounts are taxed at ordinary income tax rates. Making taxable withdrawals from these accounts will not only incur some income taxes, but can potentially increase your income tax bracket. Moreover, retirees ages 72 and over are required to withdraw funds from their retirement accounts, whether they need the money for income or not. By withdrawing funds from your retirement account, payable directly to the charity of your choice, the funds never incur the income taxes that you would owe on them. Therefore, your taxable income does not increase, nor does your bill to Uncle Sam. The key here is that the money does not stop in your hands between your retirement account and the charitable organization. So let's talk about your estate plan. Another posthumous option for leaving charitable legacy for yourself is to name a charity as a beneficiary in your will or trust. This can be accomplished by providing either a specific dollar amount, asset, or fractional share of remaining assets. However, bear in mind that it's important to note how you would like your gift to be utilized, such as to fund a specific program, or instructions in case the charity merges or dissolves. So let's take a step up in sophistication now and talk about the charitable remainder trust. A charitable remainder trust is a planned giving tool that allows you to make a substantial gift to your favorite charity while also drawing an income stream during your lifetime. Simplified, you establish an irrevocable trust from which you or another designated beneficiary receive annual payments during your lifetime or a set term of years. At the end of the designated term, the remaining trust assets will revert to the charity that you have specified. Using a charitable remainder trust entitles you to a charitable deduction equivalent to the value of the charity's interest based on current IRS tables. Charitable remainder trusts are an excellent vehicle for transferring highly appreciated security positions as they're exempt from taxes. As the charity becomes the ultimate beneficiary of the account, capital gains will not be owed upon the sale of any appreciated stock held by the trust. Now, similar to the charitable remainder trust is the charitable lead trust. They accomplish very much the same thing as a charitable remainder trust, just in the reverse order. So in this case, the charity will receive payments for a set number of years, at the end of which a designated beneficiary or beneficiaries will receive the trust assets. Increasingly popular as a tool for charitable giving is the donor-advised fund. In a donor-advised fund, an irrevocable gift is made to a fund or account at a sponsoring organization, such as a community foundation, in your name, over which you or your family maintains advisory rights when it comes to investments and distributions. Your donation entitles you to an immediate tax benefit, even though your funds may be held by the sponsoring organization for future use. You avoid capital gains tax on any appreciated positions that are transferred into the fund. The downside, though, is that you give up some control. While you can make recommendations as to the charities and grants that are supported, the sponsoring organization has the ultimate authority. However, they're also responsible for all administration and tax filings. Now let's get into the ultra-sophisticated. The private foundation. While attractive, the most complicated of all of these charitable gifting strategies is the private foundation. According to IRS tax code, to qualify for nonprofit status, a private foundation must be established for religious, charitable, scientific, literary, or educational purposes and have a primary activity of making grants to other nonprofit organizations. Forming a private foundation provides you with an immediate tax deduction for donated funds. The grants will not be made until a future date. Private foundations are often created by families as a means of creating continued stewardship in future generations. Be aware, however, that there are many additional tax rules that apply when forming a private foundation, but they also provide you and your heirs the greatest control over your philanthropic legacy. At Sound Wealth Management, we have experience in working with donors and nonprofits alike. We can help to provide guidance as to what giving scenario may be the right fit for you and your current and future financial needs. Likewise, we can help to ethically manage foundation or trust dollars that are set aside for your charitable intentions. For a review of your unique situation, please reach out to our advisory team at 941-932-4822 or schedule your no obligation consultation online at www.soundwealth.net, where Sound Wealth Management is more than just our name. Have a great day, everybody.